And many who come into the markets are insistent that they have to develop their own strategy from the very beginning, from scratch. And I was like that. I believed that at the start. But I think a much faster way for new traders or traders who are not yet profitable to become consistent is to take a strategy from somewhere else that works and then make it your own. You don't have to create the whole thing from the beginning, but you've got to test it and evaluate it and interrogate it and learn it and watch it and paper trade it and backtest it and make it yours. And then once it's fully yours, then you can trade it.
It's all part of your trading journey. And that's part of the thing what I mean about not suppressing. You're going to lose all that money. You're going to jump from FX. You're going to go to crypto. You're going to trade stocks. You're going to do this. It's all part of your journey. It's not a bad thing. You need to learn what you like. You need to figure out which market appeals to you. You know, maybe some market, you really lost a lot of money in it, but you really found it interesting. You need to explore, you know, as long as you sort of understand, look, there's zero chance I'm going to succeed in this time or this time or this time. But what there is there's all this valuable experience that I'm gathering. You know, oh, I like the way crypto trades, or I'm really, really comfortable the way Forex trades because, you know, it's much more responsive to longer term charts. I understand the long-term macro implications. I understand, maybe I want to do carry trading. And certainly that's one of the least intensive strategies because, you know, it's essentially an interest rate strategy. So as long as you have a long-term suppositional view on interest rates, you're going to have a very good time in carry trading. There's a million different things you do. It all depends on your personality. So go out there, explore. You know, I'm not a believer saying, oh, you only got to do one thing and one thing only from the beginning, and that's going to give you a success. It's almost actually going to lead you to total failure. You cannot focus on one thing until you've kind of wasted your time on many things. I think that's sort of, it's part of the human condition. You got to just really waste a lot of time and money exploring, but that's the joy of it. You know, if you still find it joyful, if you still find it interesting, that's when you can really recalibrate your focus to the one thing that you think is going to do well.
You have to start with one good strategy because usually you start with one, but sticking with only one strategy, I believe, is dangerous long-term because no strategy works all the time. You know, if you're trend following on the long side in stocks, you make really great money in a bull market, but when it turns into a bear market, it starts going down. You're going to have some give back, you're going to have some drawdown, then you're going to go to cash and your equity curve is going to be sideways and you're going to wait and you're going to have a lot of patience and wait until the market turns around and then you can start making money again when the next bull market comes. Which is fine. I did that for a long time. I traded 7 years long only stocks with trend following right at the beginning. But if you can add short side, if you can add mean reversion, if you can add a few different markets, then that's when the magic really starts to happen because you can make money in more different conditions and more consistently.
Read about the stock market of 1930s. The brokers on the New York Stock Exchange floor used to bring chess and they would play chess with each other because there'd be no price, nobody would trade with each other. Now, we're not going to be there, but the point is it's all relative and you always have to be prepared. You have to be mentally prepared for the idea that, you know, just because you're making money today in this beautiful environment, everybody's speculating. Look at, you know, crypto is a great example. Can you make money scalping Bitcoin or even ETH today? I mean, you know, the volatility went from 10% a day to, you know, 1% a day, right? I don't even know anybody who trades crypto anymore, right? Because the whole market died. And that's essentially the whole idea is you have to understand that, markets are only good. They're not good forever. They're good within a certain environment. You want to take advantage of that, but you always need to be aware of the fact that the party is going to end.
Yeah, no, I think finding the strategies is tough. And the problem is, well, the problem I found was that I read a lot of books with a lot of different strategies, and I just couldn't relate to some of them. You know, like some of them just didn't feel natural. They didn't fit my personality. I read a lot of books from US stock traders because 25 years ago, 20 odd years ago, when I was really doing a lot of this research, that was where a lot of the books came from. And I was sitting in Australia looking at the Australian stock market. And I took some of these techniques. It's like, it doesn't work. You know what? It was very frustrating. So it took me a long time to figure out that A, the markets are a little bit different, each market, and B, I needed a method that fit me, because even if the method worked, I felt uncomfortable and unnatural following it sometimes. And so I figured out that it needed to match my personality, because I'm a fairly, I don't like a lot of fast-paced action. I like to make decisions sort of slowly and methodically. I didn't want to trade 20 times a day. I didn't want to have to be looking at the screen during the day because I had a full-time job. So these lifestyle and personality constraints that I had to figure out. And my objectives were really about making money, not spending time staring at the market. So it took me a while to zero in on the right strategy to develop a system around. And eventually I found trend following. And again, as soon as I found it, I was like, oh, that's what I've been looking for, And I developed a trend following system after reading a bunch of books about it and started trading it. It was like, oh, this is easy. It just felt natural. But I know other traders who look at trend following and think, God, it's an awful strategy. You got to wait so long to take profits and there's nothing to do. There's so few trades. So for some people, trend following is great. For other people, mean reversion is great, or something in between. Some people like daily charts, some people like intraday, some people like weekly or monthly. So I had to find where I was really best placed for my personality, my objectives, my lifestyle. And once I'd found that, then it became sort of natural, I guess.
The way I look at this is that if you're a manual trader and you come up with a set of rules that you try to adhere to in order to take money out of the market, then over time, if you keep those rules constant and the same, that also might start to lose its edge as the markets begin to change and the dynamics of the markets change. And so for me, there's actually no difference. So just like you would expect a manual trader to adapt their rules and adapt the way that they approach the markets, for me as an algo trader, there's nothing different. I simply will adapt the rules. The only difference is that those rules are being run in an automated way instead of me sitting and waiting to click a buy and a sell button. So for me, there's no difference between those. And I think both approaches need to be adapted over time to cope with those dynamics that change in the markets. And they do, you'll have markets that tend to be more mean reverting at some times, and then they'll change to more momentum based dynamics. And you have to take account of that, regardless of what type of trader you are.
And how do you change those rules? Because there's a kind of sweet spot you have to find between changing it like every week all the time and then changing it like never at all. So how do you find that sweet spot of like when to change things?
For me, there are two ways. The first is what I would call sort of dynamic changes. And so I will actually build rules into the algorithms to automatically detect what type of market it is. So, is the market currently mean reverting? Is it more momentum based? And it will actually automatically tweak the rules dynamically without me touching the algorithm at all. There are some maybe longer term changes in the markets which are more subtle, which might mean that you maybe need to, come right back to the beginning, look at the rules, see if any rules need to be changed. And that type of change is something that I would maybe do every 1 or 2 years, no more frequently than that.
Good enough is way better than perfect. And the more perfect you try and make it, the worse the performance is going to be in real time, generally, because a perfect backtest is only the result of curve fitting, over optimization, too many filters, too much complexity, and it falls apart. So when I'm working with my students and when I'm thinking about my own trading, what I want to do is I want to look at the strategy in the context of my portfolio. So if I've got 10 different systems, I want to be thinking about, okay, does this new system in its current form add something to the portfolio? Does it add some diversification? And if it makes money where my other strategies don't, and it has a drawdown when my other strategies are making money, then that's a really good addition. And it's probably good enough in its current form to just put into the portfolio. But if it's highly correlated to everything else in my portfolio, then it's not good enough. it's got to either be better than what's in my portfolio to replace it, or I throw it away because it's not going to add any diversity to the portfolio. So I really want a good system, not an exceptional system, because an exceptional system is probably just curve fit. A good system that adds to the portfolio.
When you're a trader, there's always something else that you can learn. You can, in terms of self-improvement, there's always something you can do. And then I suppose the benefit for me as an algo trader is that when you come across one of those things and you realize there's something that you can change to improve that, you can then implement that into all of your strategies and you can benefit from that moving forward. So for me, no, it's, there's no beaches involved, and it's pretty much, a full working day. I work some weekends as well. And so as an example, for the last 18 months, my primary project has been this one that we talked about initially, which is that portfolio management side of things. And, for the first 9 months of that, I just hit dead end after dead end and didn't really progress. And it was only in the most recent 9 months that I've started to see some of the benefits. And I think I've really cracked that portfolio management side of things. But there's still a way to go. There's still ways that I can improve that. If you looked at my to-do list, you'd have a heart attack. I've probably got about 200 things on there at the moment of things that I want to investigate in the future. I alluded to one earlier on, which was artificial intelligence. And although I have coded in my career in the past, I've coded neural networks and similar kinds of AI technology. I've never actually got to the point yet of incorporating that into my trading. So that's probably in about a year's time I might start to look at that. But no, the to-do list is fairly significant, and there's lots of room for improvement, I think.